Hello everyone, and welcome back to Isabella's Mind and Money. Last time we explored AI-based cryptocurrencies and even sketched out a $10,000 AI crypto portfolio. We examined real numbers, growth potential, and how to strike a balance between risk and opportunity. If you missed that episode, I highly recommend catching up. It was packed with insights. And today, our new podcast topic is AI-powered trading bots in crypto. Can you really trust them to make profitable trades? To help us unpack this, I'm excited to welcome back Adrian Cross, crypto and AI enthusiast and independent researcher. Adrian, great to have you here again.
Thanks, Isabella. It's great to be back. Trading bots are fascinating, but often misunderstood. There's a lot of hype, but also tools that can genuinely help traders. It's all about knowing the difference.
Absolutely. Before we jump into the specifics, let's set the stage. There's been a surge in AI-driven tools across finance, and crypto trading bots are among the most talked about. Some promise automated profits with minimal effort, while others focus on complex strategies for advanced traders. But the big question remains, how reliable are they in real market conditions?
Right. Many bots use algorithms to track market trends, execute trades automatically, and even adjust strategies based on AI predictions. But not all bots are created equal. Some are just marketing hype, while others genuinely provide flexibility and useful automation.
So for our listeners, the goal today is to separate myths from reality, understand what makes a bot actually useful, and see practical examples of how these tools work in crypto trading. We'll also discuss risk management because automated doesn't mean risk-free.
Yes, I'll share insights from my testing and research so listeners can get a clear idea of what to expect if they decide to explore these bots themselves.
Great, Adrian. Before we dive into examples and specifics, let's start with the basics. What exactly is a trading bot? And more importantly, how are AI-driven bots different from the regular, more classic algorithmic bots that have been around for years?
Absolutely, that's a crucial starting point. At their core, trading bots are software programs designed to execute trades automatically. Classic bots, which have been used for quite a while in crypto and traditional markets, follow fixed algorithms. They're rule-based. For example, buy if price drops 5%, sell if it rises 7%. They don't learn from past trades or adapt to changing market conditions. They're predictable, which can be both a strength and a limitation.
So basically, classic bots follow a rigid set of rules. They do exactly what they're told, but they can't adjust if the market suddenly shifts or if unexpected events happen, right?
Yes, that is true. That's where AI-driven bots come in. AI bots use machine learning to analyze market behavior, recognize patterns, and adapt their strategies over time. They don't just follow fixed instructions, they learn from historical data, real-time market conditions, and even external factors like news, sentiment, or social media trends. All of this feeds into their decision-making process, which is dynamic and self-improving over time.
Interesting. So, in a way, AI bots are like traders who can analyze massive amounts of data almost instantly and adjust their strategy on the fly, whereas classic bots are like a robot following a checklist without thinking.
Exactly, that's a perfect analogy. AI bots can spot trends that humans might miss or react faster than any human could. They can monitor multiple exchanges simultaneously, track volumes, price movements, liquidity, and even interpret signals from Twitter, Telegram channels, or other news sources. All of this feeds into their decision-making process, which is dynamic and self-improving over time.
Got it. So what would you say are the main tasks these AI bots handle? Is it just buying and selling, or is there more to it?
There's quite a lot more. Their primary tasks include analyzing price charts and historical data, detecting patterns that could indicate short-term or long-term trends, monitoring trading volumes, and reacting to sudden market movements. Many bots also factor in social signals. For instance, if a token suddenly goes viral on social media, an AI bot might adjust its strategy to take advantage of that hype. And then there's news analysis. Some bots can read headlines and assess the likely market impact, adjusting buy or sell thresholds accordingly.
Wow. So they really are doing a lot more than just executing simple trades. It's like they're constantly studying the market and making decisions based on multiple layers of information.
Yes, that's right. That's the main appeal. They can process a massive amount of information much faster than a human could and respond almost instantly. Of course, the quality of the bot's decisions depends on how well it's programmed and trained, as well as the quality of the data it uses. A poorly trained AI bot might overreact to noise or misinterpret signals, so choosing the right platform and understanding the underlying algorithms is essential.
That makes sense. And speaking of platforms, could you give some examples of popular bots or platforms that traders are using in crypto right now?
Sure, there are many out there. Some classic bots include platforms like 3 Commas, Haas Online, and Crypto Hopper, which are widely used and follow more traditional algorithmic strategies. Then there are AI-driven bots like those on platforms such as Pionex or Bitsgap, which integrate some machine learning features. One platform I've been following recently is Veles Finance. I won't dive into the details just yet, but it's a crypto trading platform that's starting to gain attention among traders because of its flexibility and smart automation features. We'll explore it more in depth a bit later in this episode so listeners can see exactly why it stands out and how it works.
Perfect. That gives our audience a taste of what's coming and sets up the deeper dive nicely. Let's move on and talk now about the main advantages and risks of using AI trading bots.
Absolutely. Let's start with the promises and advantages. AI trading bots at their core are designed to give traders something nearly impossible to achieve manually: speed and data processing power. Traditional human traders simply can't monitor dozens of markets, thousands of tokens, and all the associated news, social media sentiment, and on-chain signals in real time. AI bots can do this instantly.
So it's like having a superhuman assistant watching everything for you.
Yes, precisely. And not just watching, they can react. One of the biggest advantages is accelerated reaction to market changes. For instance, if a major exchange announces a new token listing or a large whale moves significant amounts of crypto, an AI bot can adjust positions within milliseconds. That kind of reaction time is impossible for humans, even professional traders.
Wow, that's impressive. And what about analyzing all that data?
That's another strength. AI bots can process massive data sets simultaneously: price movements, trading volumes, historical patterns, social media sentiment, news headlines, and even correlations between different tokens. Some platforms integrate natural language processing so the bot can read crypto news and gauge potential market impact. For instance, during pilot tests, certain AI bots were able to identify bullish or bearish patterns before they became obvious to most traders, giving early signals that could translate into profitable trades.
Interesting. So while AI bots sound very technical, they're actually becoming mainstream among serious traders and even institutional investors.
That's why platforms like Veles Finance, which we'll discuss later, are attracting so much attention. They offer individual traders new, affordable ways to use bots in crypto trading. The bots can execute strategies automatically, adapt to market conditions, and let users test different approaches with relatively low risk before committing real capital.
Got it. So the promises are exciting: speed, emotion-free execution, and the ability to process tons of data. But I keep thinking, what could actually go wrong? Are there hidden pitfalls that traders might overlook?
Absolutely, and that's a key point. The benefits are real, but AI trading bots aren't magic. There are several risks every trader should know. For starters, there's overfitting. Bots trained too specifically on past data may perform well in backtests, but fail in real, unpredictable markets. Sudden crashes, extreme volatility, or rare events can completely throw them off.
So a bot might look perfect in theory, but in reality, it can stumble if the market behaves unexpectedly, right?
Absolutely correct. And then there's the data quality issue. Bots rely entirely on the inputs they receive. If your price feeds are delayed, social sentiment data is inaccurate, or news signals are noisy, the bot can make wrong decisions. It's the classic garbage in, garbage out problem, and it happens more often than people think.
Makes sense. So even a sophisticated AI can't overcome bad data. What about technical problems?
That's another big factor. Bugs, coding errors, or vulnerabilities can cause major issues. Even a small mistake in the algorithm could trigger unwanted trades, huge losses, or system crashes. Not all platforms test their code thoroughly, so the responsibility is on the user as well.
Right. So it's not just the market, it's the platform itself that can be risky. Are there other types of risk?
Absolutely. There are regulatory considerations. Different countries have different rules about automated trading and AI-driven systems. A bot that works fine today might run into legal restrictions tomorrow. And then there's fraud. The crypto world is full of services promising guaranteed profits. Some are scams. Traders must carefully vet any service before committing funds.
Wow. So it's a mix of market risk, technical risk, regulatory risk, and even scams. It really highlights the importance of research and vigilance.
Exactly. And there are real-world examples. Bots have failed during sudden market swings, amplified losses instead of reducing them, or even stopped working due to server or software failures. These aren't just stories, they happen in practice.
Absolutely, Adrian. And I think it's important not just to talk about the risks, but also to give our listeners a concrete example of how they can start exploring AI trading bots safely. Could you share a platform you've personally tested that really impressed you?
Sure. One platform that's caught my attention is Veles. It's relatively new, but it's already gaining traction among traders because of its flexibility and accessibility. What I like is that it doesn't hold your funds directly. All your money stays on your exchange account like Bybit or BingX. Veles simply connects via API and executes limit orders based on the rules you set. So the bot is fully automated, works 24/7, and there's no emotional decision-making involved.
That sounds good. So the bot is basically executing trades according to your instructions, but your funds remain fully under your control on the exchange.
Yes, right, and it's really easy to get started. You just register on Veles with an email and password, verify your account, and then you can complete a few initial tasks to receive some free credits. These credits are enough to experiment and set up your first bot without risking your own money. You even get a bonus for connecting the API to your exchange account.
Wow, so you can literally test the bot and see it in action before committing your own funds. That's practical. How does the pricing work for the service?
That's another thing that makes Veles stand out. They charge a small commission of 20% on the profit the bot makes, but it never exceeds $50 per month no matter how much you earn. This makes it very cost-effective, and you don't need to purchase any extra licenses like on some competitor platforms.
Nice, that sounds very beginner-friendly, but still useful for experienced traders. What kind of bots can you run there?
You can run both futures and spot bots. For example, the spot bot can generate profit from holding coins like ETH or BTC, even if they're just sitting in your account. The futures bot lets you trade with leverage, and you can choose your level of risk: conservative, moderate, or aggressive. Personally, I recommend starting with long positions on major coins like BTC, ETH, or SOL. That minimizes risk while you learn the system.
And what about the actual settings? Can users customize them?
Absolutely. You can set the deposit amount for the bot, leverage if it's a futures bot, and configure the trading strategy. There's the overlap setting, basically how much of a drawdown you want the bot to recover. For example, on my trades, I usually set it between 35 and 50% to stay safe. You can also define the number of orders, apply a martingale strategy to adjust order sizes, set stop-loss thresholds, and configure take-profit percentages.
So once all the settings are done, can you just launch the bot immediately, or is there another step you recommend first?
I wouldn't launch it right away. It's always best to run a backtest first. Veles lets you simulate your bot using historical market data so you can see how your settings would have performed over the past few months. This helps identify potential mistakes, optimize parameters, and avoid unnecessary risks before putting real money on the line. For example, you can check your chosen coin, leverage, and strategy against historical price movements, see potential profits, and understand the maximum drawdown. Veles even shows a visual preview of all your orders, average entry points, and stop-loss levels, which makes it much easier to fine-tune the bot before launching it live.
So listeners could literally follow your example and start experimenting with their own bots without being overwhelmed by complexity or risk, right?
Precisely. And one more thing, the platform was built by a team from the CIS region, but it's designed for international use. The flexibility is impressive. You can create sub-accounts, manage multiple coins, and adjust bots on the fly.
I've got multiple futures and spot bots running, and over the past month, I've already executed around 1,000 trades with a positive result on every single one.
That's incredible. It really shows how theory and practice come together. We've discussed risks and possibilities, and now listeners have a real hands-on example to try. I guess the key takeaway is that with a structured platform like Veles, combined with proper risk management, you can make AI bots a practical part of your trading strategy.
Absolutely correct. And for anyone interested, you can check the platform out directly. It's simple to set up, test, and start learning how automated trading works. It's a great bridge from understanding AI bots in theory to actually using them safely and effectively.
That sounds very practical, but for someone just starting, what would you recommend? Should they jump in with real money right away?
Not at all. I always advise starting small, either with demo accounts, if the platform offers them, or with minimal amounts you're comfortable risking. This way, you can learn the mechanics of the bot without putting too much at stake. Also, take the time to really understand the algorithms and strategies your bot is using. Even though it's AI-driven, knowing what conditions trigger buying or selling decisions is crucial.
Makes sense. And I guess it's also important to check the platform itself.
Absolutely. Always review feedback from other users, check whether the bot's code is open or audited, and see how transparent the platform is about fees and limitations.
Good point. And what about risk management?
Set clear limits on losses. Don't rely solely on the bot, and consider combining automated trading with manual strategies or hedging. Even the best AI can't guarantee profits, so you should always know how to intervene if the market goes against you. Finally, I can't stress this enough. Always do your own research, DYOR. Even when a bot seems perfect, or you see others making profits, your own understanding and careful planning make all the difference.
Got it. Start small, learn the strategies, manage risks, and do your homework. That's solid advice for anyone stepping into AI crypto trading.
Exactly. If you approach it this way, automated trading can be a powerful tool without turning into a dangerous gamble. And platforms like Veles make it accessible, practical, and much safer to experiment with.
That's encouraging. But looking ahead, where do you see AI trading bots in the next 2 to 5 years? How is this space likely to evolve?
Great question. I think we're going to see a massive increase in adoption, not just among individual traders, but also institutional players. AI will become a standard part of trading toolkits rather than a niche experiment. Another trend is hybrid strategies, where humans and AI work together. For example, AI can handle rapid analysis of market data, social signals, and news, while a human trader applies judgment on strategy adjustments, risk management, and larger macro moves. This combination could dramatically improve decision-making efficiency.
So the bots won't replace humans entirely, but rather augment our capabilities.
That's right. It's more about collaboration than replacement. And along with that, we'll see more regulation and transparency in automated trading. Governments and exchanges will likely introduce clearer rules for AI-driven trading, making the space safer and more trustworthy.
That makes sense. Regulation could actually boost confidence rather than stifle innovation.
Yes, absolutely. And then there's potential for innovation beyond simple trading. Imagine AI bots integrated with DeFi protocols, smart contracts, or social trading platforms. Bots could automatically adjust strategies based on community signals, liquidity changes, or even execute complex automated investment plans that today require multiple manual steps.
Wow. So the next few years could completely reshape how we interact with crypto markets.
Yes, it's going to be fascinating. The tools will become more sophisticated, accessible, and flexible, but the core principle remains. Understanding, strategy, and risk management will still be essential. AI can amplify returns, but it's not a magic button. Smart traders will always be needed.
Absolutely, Adrian. That really sums it up. AI trading bots are powerful tools, but success still depends on knowledge, planning, and making informed decisions rather than relying solely on automation.
Yes, of course. They can amplify your results if used correctly, but understanding the markets, managing risks, and staying informed are still key.
So, for our listeners, the takeaways are always evaluate the risks, do your research, start with minimal amounts, and never invest more than you're willing to lose. Platforms like Veles can help you experiment safely, but caution is still essential.
Couldn't agree more. And remember, testing strategies, learning from experience, and combining AI with thoughtful human judgment is what makes a trader successful.
Adrian, thank you so much for sharing your expertise today. Your insights on AI bots, practical examples, and risk management are incredibly valuable.
It was my pleasure. I'm always happy to help traders and enthusiasts navigate this evolving space.
And finally, a few more words. If you enjoyed this episode, don't forget to subscribe, leave a like, and share your thoughts in the comments. What questions would you like us to explore next about crypto? We love to hear your suggestions. Thank you all for listening. Stay safe, and most importantly,
Stay curious
trade smart.
and keep learning.